Hello, this is John Piper with the weekend video clip, and it's Saturday the 5th of September. I'm starting with the Chinese market, the China 300. I think this gives us the best guide of what's going on. We had the 5 waves down. Not a great deal of change since our last report, but I think we're now at sort of the stage where we're going to see that final 5th wave I've been talking about. 5 waves down to there, which is 1, 2, 1, 2, 3, 4. And now we've got this 5th wave coming in. So I'm looking for a move below this low here, and the low there is around 2.6. Let's check it out actually. Okay, those at 2.532. So a low below 2,500 is indicated to there. That would actually complete wave 3 of this 5 wave, but I'm expecting a 5 wave form. Bounce 3,000, and the 5th wave should come in. So what I'm expecting is perhaps a low early next week. We have bank holidays again. I'm not sure whether one in China. I suspect not, probably, but anyway. Low next week is on the cards. A bounce up. We have expiry in 2 weeks' time. This could be a pivotal once again. But I'm expecting things to be quieter now for the next few weeks. We've got this low, corrective rally, onward decline, so we'll be going broadly sideways if this pans out over the next perhaps month, in fact. Then a stronger rally as a wave 4. I'm still looking for 2226 as a minimum, but that's this move here. So I'm not thinking that next week. Of course, in major declines, you can get acceleration. So nothing is written in stone, but this 5th wave, if it is a 5th wave, of course, would be expected not too much more than take us down below 2,500. 2,005 is a fairly key level, obviously. The high was 5.4, so 50% was 2.7, which explains the support we're seeing around current levels. I'll look at the hourly chart quickly. I can't say this decline is actually giving us a huge impression. I believe I've got 5 waves down, actually down to there. So this looks like I'm going to A, B, correction. So yeah, I mean, it's hardly an ideal pattern, but just the last 2 days just really gone sideways. But I say 2.5 looks likely before this particular sequence is over. Right, on to the Dow. We discussed this fairly fully in Wednesday and Thursday, so the midweek video clip. This is a pretty obviously corrective form, A, B, C, B, C. We're now drifting down again. Wave count's a bit obscure here. With such a solid spike, it may be that we're going to hold this. China is rather suggesting that we're not going too much lower at the moment. So it may be that low will hold on the Dow. Not going too much over the next couple of weeks into expiry, which is what normally happens. Actually, we normally see the fast action in the 2 weeks before expiry, 2 weeks after expiry, and we see the quieter action 2 weeks into expiry. Another rule which is not hard and fast, but certainly we saw the really fast action immediately after expiry a couple of weeks ago. There's no real change here. I think we could easily retest this level. We could break the level, but I don't think we're going to see much below that. Certainly, I think the support around 15,000 is going to hold as far as this phase of the move is concerned. The next phase I expect to break. FTSE still has various interpretations. We discussed this rather fully in the midweek report, so I'll keep this a bit quieter, a bit shorter to say. 5 waves down to there. Looks like an ABC all in one, as it were, there, followed by 1, 2, 3, 4. So we could see a bit of acceleration down here come Monday. Maybe that's what we're seeing in China, is a bit of another panic selling thing below 2.5 in China, below 5.8 here on the FTSE. That would give us 5 waves down again. So that would be a very similar pattern in some ways to what we're seeing in China. We then expect to be a 4th wave coming in. Slightly out of sync with the Chinese market, but these things tend to iron themselves out, and a bit more upside before we see a bigger fall coming in, probably in October. October is sort of traditionally the time when markets seem to fall more sharply. Right, have a look at the DAX. Very similar pattern to the Dow here, quite a decent spike, clear corrective action up to there, ABC, B, 1, 2, 3, maybe 4, 5. Now a slightly dithery affair. You can just about count 5 there, in fact. Very sharp snapback. Well, that is an ABC. ABC. Now going down again. So again, we could actually see acceleration next week, but again, I think it'd be contained. I'm not saying we're not to see sharp falls. I'm just saying that I think we're going to see us go much below the spikes we saw last week. So the week before last. It's quite common for some markets to hold, some markets to break. That would be quite a likely scenario as well. Well, Japan's quite interesting. We had the 1, 2, 3 ABC that everybody else has seen. Now we're getting a same kind of pattern, 1, 2. So again, we could easily see a breakdown there, some kind of fifth wave. Really set the scene for a decent snapback rally, but I think it would be corrective. That's my expectation. Finally, gold. Right, gold's fallen back again. We've seen this A, B. It could be a flat, it could be a C to there, or it could go lower. What we don't want is to see acceptance below this kind of level. I said it before. We really need to see gold bounce up from those sort of levels. We need to see a sustained move, obviously, above here as well. So although it's looking encouraging, it's actually failed at the 50% retracement level, which I was talking about. And that's the level between 1170 and out here around 1115 thereabouts. But it is possible we're going to see just gold break through and actually test the lows we saw earlier in the year. So we have this really solid base here, well, pretty solid base, nice breakout. If this is a 5-wave affair, 1, 2, 3, rather than get a fifth, this needs to retain its ABC type form, although it can go lower. To this area here would definitely be a big negative. I mean, it could hold, but it's certainly of some concern, and we'll have to wait and see what happens. If we do see extra fall away sharps next week, then we could see gold rally, but you really need to get above here to confirm that this is the new bull market I've been talking about. I will just show you the monthly chart of the Nikkei before I go. Quite impressed that the service actually just give you live charts, gives data all the way back to, I think it's about 40 years of data, back to the 70s. Quite useful for long-term charting purposes, but the high was here, obviously, around 39,000. Great big collapse, which clear 5 waves turned out to be an A wave. This is not a log chart, so this fall here is actually bigger in some ways, but of course looks smaller because it's not a log chart. So we've got perhaps an inverted type diamond shaped correction there maybe, and this would then be the ABC C wave, as it were, or I don't know how to count it really. We then saw the actual low around 7,000, which was typically 80%. Big bear markets tend to drop to 80%. In this case, over a period of about 20 odd years, a bit less actually, but still significant. We now may have seen the low, 1, 2. We may have seen the third wave now. This could be the start of the fourth wave coming down. But I expect the Nikkei to not see another 8% decline. I think it will be stronger. Nevertheless, we are seeing some quite solid action. But the 50% level of here is around this level that I was talking about in a report recently. It is obviously proven a bit too much for the market. Although also there as well, in fact. And at the moment, I think there's more to come. Anyway, I think I've covered the ground. I hope you found that interesting and useful. I'm back with the report on Tuesday morning for subscribers. If you want to subscribe, there's a link on the report. Have a great weekend. Thanks for listening, and bye for now.